Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Um, I haven't talked about this in a while, so I figured I would just do a quick little refresher because it's important. And if you are in some of the same trades as me, or even if you're doing your own trades, kind of like a nice idea to walk through. And it's the timing of entrances, right? And I'm not speaking to like the actual chart setup. I'm talking about literally like the time frame when I like to get into trades during the day, right? And some people are super active right at 9:30, right when the bell opens. Me, I'm usually not as much, and that's partially because I like to wait for the option spreads, so the bid-ask spreads to fill out. Better liquidity, better volume, tighter spreads, so you're not paying, as wide of like a spread when you're trying to get in, and especially if you're doing a more complex strategy like flies or call spreads or put spreads, because multiple legs with wide spreads, low liquidity is kind of a recipe for disaster, right? So when it comes to swing trades, so stocks with like time frames like several weeks to a couple months, I like to wait for the first 20, 30, even like 45 minutes before I get into some of these trades, right? And then like, whether it's 20 minutes or 45 minutes kind of depends on like the feel, right? So there's a little bit of a feel, but I mean, to me it's usually like a little bit of like a waiting game. So like silver, I was looking to enter um, put swing, right? And so what I waiting for like the books to fill out, and then during the morning it gives you a little bit of an opportunity. You can go after it, be a little bit more patient. Stock has a little bit of like a bounce, but you're waiting for like the liquidity to fill out, books to fill out, and then usually it's anywhere from like 20 minutes to maybe like 45 minutes. So that's like the time frame after the open that I like to enter swing trades. Okay, so whether that's straight calls, put spreads, call spreads, it doesn't really matter. Any directional trade, I like to wait. All right. If it's just a day trade, now if it's just a day trade and I know I'm going to be into it after the open and out before the close, then I might get in a little bit faster. But always trying to be aware of what the bid-ask spreads are, right? Because like I really just don't like to pay wide bid-ask spreads and low liquidity. So I do have like a little bit more aggressive time frame because I know the trade is just very short. So I mean, I might jump in a lot sooner, but always mindful of what the bid-ask spread is, right? Now, the other trade would be like a volatility strategy, meaning like a straddle or strangle. For those, I like to wait until late in the day. All right, so I'm not going to normally enter those in the morning. Most of the time, it's going to be late afternoon, like 2:30 into the close. And the reason is because when it comes to like a volatility strategy, like I normally design them so they're about 50-50 risk on the bull and bear side, right? So pretty even based off of, so pretty even um, bias, right? So like, half the risk is on the bull side, half the risk is on the bear side. So the problem is if I get into those early during the morning, right? So like a name like ChargePoint, you open like a straddle or a strangle, right? You get into it early off the open. Stock maybe has like a huge rally during the day. Then all of a sudden, going into the close, the call side of the strangle has gone up significantly, and then all of a sudden the bear side has gone down a lot, right? And the stock is now closer to the call side or maybe even in the money, and like the position has all of a sudden gone from like a 50-50, which is what I wanted, right, bull bear, to now all of a sudden it's probably skewed much more dramatically in favor of the bull side, and I didn't want that, right? I want it to be 50-50, so I wait late in the day to get into those because I want them to be as close to that 50-50 most of the time as I can get, and ideally, close to the bell, right? So, I mean, things can still move like late in the day, but I feel like at least then it decreases the likelihood of a gigantic move before the bell, right? Versus like getting in at like 10 o'clock in the morning, and then you have the entire day, and the stock could be all over the place by the time 4 o'clock rolls around, right? So straddles, strangles, typically it's 2:30, 3 o'clock into the close. That's when I'm looking to get into those positions. All right, so um, depends on the trade, depends on the strategy, but that's really how I like to go about it. And then again, if it's like a day trade and I know I'm not going to be in it by the time 4 o'clock rolls around, then I might be a little bit more aggressive with my timing and get in like right off the open. Okay. So it's been an interesting week. We'll see what tomorrow looks like, 1st of October. Some people think that maybe some of this was due to the quarter end, so we'll see. Tomorrow will let us know. All right. So if you like this video and you're looking for more information about swing trading with options, please follow up with the link in the description of the video for more information on options to play. Have a great night. Stay well, and I will talk to you all tomorrow.